Welcome back to another video. My name is Adam. I have not posted in a while, but in this video we're focusing on Zoom video communications. But Zoom stock is zooming upwards after posting their quarterly results. I am a shareholder of Zoom. That is my disclosure here. So let's go over their results and why I think this stock will zoom even higher in the following years and months to come. Again, I'm sorry I haven't been posting recently. I have my thesis defense tomorrow. I've had some really good news about medical schools lately, so I'll disclose that in another video. But let's just focus on the topic here, which is Zoom. So Zoom right now after hours up 16%. It's generally been a pretty beaten down stock, so it's $106 right now after hours. And still, despite this, you look at the year-to-date performance, it's down 51%. Okay, it was a $184 stock. Of course, this move will help it to go upwards again, but it's just been absolutely tanking as the world reopens. However, I think that this is overblown when you're looking at the retail space or office space being leased out. I mean, offices are still half empty. Sure, people are returning to work, but the future is in the hybrid model where employees maybe work 3 out of the 7 days of the week in the office. They spend that in the office, and the other 3 days or 2 days they work at home and they still use Zoom for their meetings. I personally prefer Zoom over Microsoft. Microsoft Teams is the competitor to Zoom. And I prefer Zoom like 100%. It's just easier to use. And Zoom also has first mover advantage in that space, although of course Microsoft is a much larger company. However, I just think Zoom is a beaten down stock, and I mean, I just think there are good things to come for the stock price. That's just my advice. Don't follow it at all. This is just for entertainment, but we're going to go over why I like Zoom stock and why I own Zoom stock. So a lot of people are looking at it here, 122 people viewing, but anyways, first quarter revenue was 1.07 billion, up 12% year over year. And they're supposed to be actually decreasing their users because apparently everyone's going back to work. The whole world is reopening. I mean, I would say that's not necessarily a fact. You look at worldwide, sure, COVID cases are decreasing. In the US, though, individually, COVID cases are rising. And COVID is still a pandemic. It's still a huge problem. There's still a hesitancy in the uptake of vaccination rates. So, I mean, I wouldn't be too certain that, sure, it's declining. I mean, maybe plateauing a little bit, but at least it is so dependent on the country. And a lot of employees don't want to go back to full office work. Okay, they want a hybrid model. And if you're a company and you're not offering the hybrid model, yeah, employees are going to go elsewhere where they do have a hybrid model. So operating margin of 17.4% and non-GAAP 37.2%. Net cash was 526 million, 49% margin, which is pretty damn good. I feel like number of customers contributing more than 100 grand in trailing 12 months revenue, up 46%. So nice to see that they're very high-paying customers that pay more than 100,000 in 12 months was up 46%. So that's huge. Let's just look at the highlights first, and then we'll look at this little quote here. So total revenue is up 12%, of course. We already kind of discussed this. So net income, GAAP net income attributable to stockholders for the first quarter was 113.6 million or 37 cents per share, compared to 74 cents per share in the first quarter of fiscal 2022. So, I mean, I guess a bit down, but that's to be expected. I guess it's all in the forward guidance as well, why the stock is up so much. Non-GAAP net income was 315.8 million. Non-GAAP net income was $1.03, and in the previous year it was $1.32. So yeah, doing a bit worse than before, but not by much. So total cash and cash equivalents was 5.7 billion, and so they have a lot of cash going into the new year that can basically provide liquidity for and investments into new opportunities. So 198,900 enterprise customers, up 24%. 2,916 customers contributing more than 100,000. So not bad, I guess. Not bad. And so the following guidance for its second quarter, so of 2023 and full year 2023. Total revenue is expected to be 1.15 billion to 1.12 billion, and non-GAAP to be between 360 to 365 million. So that's not bad. For full year 2023, total revenue is supposed to be 4.5 billion and 4.55 billion. So that's not bad again. So they're expected to earn 3.7 to 3.7 cents per share, with approximately 309 million non-GAAP weighted average shares outstanding. So again, this is above expectations. You can look at what they highlighted in their in their investor presentations, but this basically beat expectations, and so this is why the stock is up right now by 17% after hours. I mean, it's also got hammered pretty difficultly over the past year, and so now maybe it's just like taking a break now that people can actually be safe in knowing that Zoom is not a dying stock. Revenue's up 12% year over year. So in Q1, we launched Zoom Contact Center, Zoom Whiteboard, Zoom IQ for Sales, demonstrating our continued focus on enhancing the customer experience and promoting hybrid work. They believe that these solutions will further expand our market opportunity for future growth and expansion with customers, said the CEO. In Q1, they delivered revenue of over $1 billion, driven by the ongoing success, and maintained strong profitability and cash flow, et cetera, et cetera, et cetera, et cetera. So again, they're not really saying much, but they handily did beat at least guidance expectations, which is the main reason why stock goes up after hours. And their quarter wasn't, I mean, I don't think it was amazing, but it wasn't terrible. Yeah, I mean, if you go in Zoom stock, if you look at this here, so let's just see what they were doing here. Just pause this. So, so in the quarter, they're expecting 1.07 billion, and of course, we see here it was exactly 1.7 billion. Adjusted EPS $1.03, and yeah, here. So I mean, it basically revised its full year guidance to be between 3.7 and 3.77. So yeah, like just because of that improved financial outlook, Zoom stock did rise. So yeah, I mean, I just think Zoom is a really good play. I use it all the time for attending meetings. I mean, even at the last conference that I was at, it was happening live, but at the same time there was Zoom in the background for people who couldn't attend in person. So I mean, I do think that just ease of access, ease of use of Zoom, not everyone can be at the same place, not everyone can travel to a conference and have that privilege. And so Zoom will be sticking around, and I think that it is the dominant player. It has a first mover advantage over something like Teams, and so I just think it's a good play. If you're looking at the 5 years, like it's only up 44% since 2019. I mean, it had a huge run up, 800%, before falling back down to 84%. And again, I think this is overdone. Let me know what your thoughts are. Please be sure to subscribe to my channel, like the video, and I'll see you in the next one. Take care. Peace out, guys.